Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Here's your U.S. markets wrap with me, Ryan Huang. We've got stocks rising and crude oil prices tumbling as investors breathe a sigh of relief that Iran's response to U.S. attacks over the weekend was more restrained than expected. And that saw the benchmarks climbing higher slightly. We've got the Dow Jones Industrial Average up about 0.9%. The S&P 500 gained 1%. And the Nasdaq Composite was higher by 0.9%. And to help us unpack what's going on with the markets and what to look out for in the days ahead, we've got Dilin Wu. She is the research strategist for Pepperstone. Dilin, good morning. How are you doing?
Good morning. I'm good. How are you?
Yeah, I'm good as well, but busy with all the action going on. And we've got quite a bit of catch up with what's playing out in the Middle East. So the latest is Iran attacking an American base in Qatar after the weekend attacks by the US. And it looks like markets are actually up. What do you take away from this?
Well, I actually read a really interesting news early this morning. It reported that Iran gave Qatari officials and also Trump administration advance notice that attacks were coming. I mean, you don't really tell your enemy that you are going to hit them. You're trying to escalate things, right? So I feel like the crude downside is very logical, as if this is the extent of any Iranian retaliation, then all the Strait of Hormuz, escalation kind of narrative can be put to bed and priced out. So I think markets fully notice this kind of positive development, and I think there are, less panic selling in the U.S. equity or the general risk market, and also less safe haven demand from gold and this kind of hedging assets.
Yeah, I'm just looking at the action when it comes to some of the safe havens. It's a bit of a reversal. Gold is down. Got oil prices down as well right now. So I'm just thinking how this is all going to play out. Where do you see things going from here?
Well, I think we have high probability to see oil prices go down to as a main reversal. And because we are pretty much priced out all this drama in the Middle East, and besides this kind of geopolitical factors, I think we really need to keep in mind two other key elements that can support oil prices in the short term. The first one is obviously OPEC Plus is set to hold its next ministerial meeting on July the 6th. And although the current agreement plans for continued production increases, I think if they, further push this increase in the near future, then I think it will, add much more burden on oil prices. And the second one for oil is obviously the summer driving season is underway in Europe and the US, basically the general North hemisphere, with gasoline and diesel demand expected to rise significantly. So if crude inventories drop more than expected over the coming weeks, that will strengthen expectations for demand recovery and give prices some fresh upward momentum, and especially with refinery utilization rising and supply chains not fully back to normal yet, seasonal demand combined with potential supply-demand mismatches could push prices even higher. And for gold, I think basically we're going back to some fundamental drivers, including the Fed stance on rate cuts and also some economic outlook and economic data from the U.S. side.
Yeah, so a good point on the supply-demand equation when it comes to oil. Where does OPEC Plus fit in? Is there a chance they could step up as well in terms of production?
Well, I think they are more likely to further increase their production is because basically the initial point for Saudi and its allies to increase this production is firstly to take more shares from the hands of the U.S. And the second one is, to bring down the oil prices and earn more profit from their hands. And maybe because of some geopolitical developments in advance, they will consider to have a wait-and-see approach to hold the production increase kind of plan to see how the market would digest the Middle East tensions. But now we are get rid of all that geopolitical development, so I think there are higher probability to increase further, to take more shares and to put some pressure on oil price.
All right, Dilin, just to wrap things up, looking ahead to the rest of the week, what's going to be on your radar? What you'll be looking out for?
Well, obviously, I think US PCE is quite important to be released on Friday. So the market expects a month-on-month growth of core PCE to be 0.1%, pretty much in line with the previous print. And the year-on-year number would be 2.6%, which would be 0.1% greater than the previous value. And I think why that is important is because we are looking back to some fundamental narratives. And as we all know, that Fed is still in the wait-and-see approach. They are looking into the labor market and they are looking into the inflation scenario. And at the moment, we haven't seen any clear signal that the inflation caused by tariffs or caused by this Middle East tensions is introduced into the market or, introduced to the consumer side. But it is the case, like we see gradual increase in this inflation, and we have already saw some bearish signals from the labor market from the initial and continued jobless claims for the past half month. So if we see greater than expected inflation, then that will have more confidence to have their wait-and-see approach, and maybe we can only see 125 basis point rate cut in this December instead of 50 basis point rate cut by the end of the year.
All right, great snapshot of what to look out for the rest of the week. We've been in conversation with Dilin Wu. She is the research strategist for Pepperstone. Dilin, thanks for your time. Have a great day ahead.
Thank you. You too.
All right, great chatting with you. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.